This conference will now be recorded.
Okay, so we're moving now to the master budget process, And hopefully as we go through the material today, you'll get some sense of what you're doing. Companies have to deal with liquidity. And as we said, we're looking at things in a planning perspective, looking toward the future. But every company has to have a month to month. We're only going to do it quarterly here. Liquidity cash statement to make sure that they got enough cash. That is, we have all the companies in the malls planning, making plans for the sales during the holiday season. But if you went into the mall this summer, there were not a lot of people. But that company still had to pay its expenses. So that company has to have a planning process in all companies so that when sales are not high, they have a plan to borrow money. They have to have a plan, and they have to do it before the year starts. If you don't have the money, if you have not made a plan with your banker prior to the start of the year, then once you get in trouble, he's not going to help you. And so the purpose of the master budget process is to especially look at the cash that you're going to need quarter by quarter. In actual practice, it will be done monthly. And then create a line of credit if you need it early on in the year. So, and that's what you're going to be doing with your companies. So let's look at how this works. And in the master budget process, we're going to be using quarterly units. So our budget periods are going to be quarterly. We're going to have a selling price by quarter, sales by quarter, collections by quarter, total expenses, both fixed and variable, payment of the expenses, beginning cash balance, and a desired ending cash balance. And we're going to see where we are. So let's see how that would look. Suppose we had a company, and this company's sales were quarter 1, 20, 10, 10, and 160. So this is how things go. Most company sales are in the fourth quarter, especially in retail. And let's assume their selling price is $50 a unit. And we'll have all the sales in cash. They got a beginning cash balance of 100,000, and they are required to keep that 100,000. They're selling books, and the books are $20 each, and we pay cash for the books. We pay rent of $1 million every quarter, so no matter what the sales are, we have to pay $1 million. And we always want $100,000 in the bank. So these are our assumptions, okay? These are our assumptions. So let's see if we can determine how things are going to look at the end of the first quarter. How are things going to look at the end of the first quarter? So quarter one, beginning cash is 100,000. Okay, that's what we started with. Our sales were 20,000. So we sold 20,000 units in quarter one. Our selling price, we said, was 50. So the selling price is $50. And so what are our total sales going to be in quarter one? We're going to multiply 50 times 20,000, and that's going to end up being what? What's 50 times 20,000? Is that $1 million maybe?
Yes.
Okay. We had a beginning cash of 100,000. So the business has cash in this first quarter of 1 million. Any question on how we got $1,100,000? Okay, let's look at what the company has to pay. If it's going to sell 20,000 books, it's got to buy 20,000 books. So we simply are going to multiply 20,000 times the cost of the books. So how much are the books going to cost us?
What is it? $20 per book?
Yep, $20 per book.
Times
We
the
got
20,000, that's 400,000.
It's going to be 400,000. Our rent every month in the mall is $1 million in our bookstore. So our total expenses are what? $1.4 million. How much cash we got available? $1.1 million.
300,000.
Yeah, but we in the wrong way though.
So negative 300,000.
You're short of 300,000. If your business only brought in $1 million and it had a beginning balance of 100, so it only had $1.1 million, but it had to pay that rent and pay for these cost of books, $1.4 million, it would be short 300,000. Now the company, our company, is always supposed to have $100,000 in the bank. So how much do we need a line of credit for in this first quarter?
400,000.
That's right, Rod. We got to borrow 400,000. Now the key is you got to have prepared this document. Budget. Got to have this prepared at before the year starts, because the banks don't loan money to people who are in trouble when they're in trouble. So this is fall of 2021. What am I going to save this to? Any questions on what we just did? Can everybody do that?
Is this in Blackboard or are you just giving us an example?
I'm getting ready to send it to you now.
Okay.
Okay, so principal accounting 2. Let's go to course content. See if I can find it. Oh, why aren't you here? Oh, it's there. So you should be able to go into course content in Blackboard and pick this form up. Does everybody have it?
For whatever reason, Professor, I still get that 404 file error. I think I might need to call somebody.
Does anybody else have it? Did anybody else get it?
No, sir. It's been saying 404 for all documents. It's not just yours. It's my other class too. Something wrong with Blackboard.
Uh, uh,
Are you talking about the cash budget chart?
yeah.
Yes.
Yeah.
Marvin.
I got it.
Same.
I got
So-
it. I just downloaded it to Google Docs and opened it in there and it worked.
I got it as well.
Okay, so
Can y'all post it or something?
how many people don't have it?
I guess I'm
I don't
one of
have
them.
it either.
I don't have it.
So why don't you do this? Why don't you
I
email me?
sent it in Group Me.
You
So
put it
if
in Group Me?
y'all could press it to see if it works.
See if that works.
It works.
Good.
Yeah.
Okay. So this is a company in the mall that's only has sales of 20,000 in the first quarter. That's after Christmas. Then we get to quarter 2, the sales of 10,000. So if the sales of 10,000, wait a minute, that's the beginning cash, excuse me. What's our beginning cash in quarter 2 gonna be?
$100,000.
Gonna be 100,000. So whatever it was at the end of the prior quarter, and we said the sales were 10,000 units. Selling price still 50. So our total sales now are only gonna be what? 500,000? So how much cash we gonna have available? 100 plus 500,
100,000.
might have a little bit more than that. Your sales and your beginning amount, so you're gonna have 600,000 available. What we got to pay? We got to buy 10,000 books at what, $20 each? So that's gonna be 200,000. The rent is still $1 million. So our total expenses are what, $1.2 million. And this is sort of what happens in the mall, for the stores operating in there, because you don't have the people shopping. And so the total expenses are $1.2 million, and we only got 600,000 available. Then we're gonna be in the hole for 600,000. So how much we got to borrow this quarter?
$500,000.
How much?
700,000.
Got to borrow 700 this quarter. And that's going to give us our 100,000. All right, you all do quarter three.
Okay, I have a question really quickly.
Okay.
We get 700,000 from borrowing. How did we get 700,000?
You always got to have 100,000 in the bank. So you can't run a company, without any money in the bank. So you always borrow and you keep a minimum balance of 100,000. So you got to borrow enough so you get 100,000.
Okay.
So all those stores you see out in Galleria Mall, this is what they looking like. But they just taking this to the bank so they can get these loans in. So what's quarter three looking at like? And the sales in quarter three are 10,000 also. So let's put our sales in there, 10,000 in quarter three. But then quarter four rolls around and then 160. So run me through quarter three and tell me what it's gonna look like. So how they looking at the end of quarter three?
Isn't it the same as Q2?
I believe the beginning balance is what?
100?
So we sold, the selling price still 50. So once again, we only got $500,000. So our cash available is 600,000. Cost of the books is going to be 200,000 again, because it's still just 10,000. The rent is still $1 million. That's what the mall is charging. So your total expenses are $1.2 million. So you still are down and because you've got to have $100,000 in the bank, you got to borrow $700,000 again. Now the fourth quarter comes and we've been able to get these loans. What is the fourth quarter going to look like?
So for sales, it's gonna be 8 million because we're doing 50 times 160, right?
So what?
It should be 8 million because we're doing 50 times 160,
160?
160,000, right? We're doing 50 times 160,000, so it'll be 8 million.
Okay. How much cash we're gonna have available?
8,100,000.
8,100,000.
Okay. What are our payments gonna be?
$3,200,000 for the cost of books. And then 1 million for the rent, and the total expenses are 4,200,000.
What's our excess cash? How much cash do we have after?
3,900,000.
And we borrowed in the past $1.8 million, correct?
Yes.
We're gonna pay that back. The bank's gonna want their money paid back. And I got it on the wrong line. So at the end of the year, the company's got to pay it back. And what's their ending cash balance going to be?
2,100,000.
But you see, they never would have gotten here if they didn't have these loans, because they'd have been shut down and kicked out the mall. So when you're running a company, you run a cash budget. We're doing it quarterly, but typically be monthly. And you're getting this line of credit because most retail businesses look like this, with most of the sales in the fourth quarter, but they still got to pay all the expenses in quarters 1, 2, and 3. The banks, of course, charge interest, so that's why those bank buildings are so big and tall downtown, because they're making interest. So if we look at some totals, our cash now will be $100,000. Our total sales be what? What were the total sales of this company?
10 million.
And how much did we pay for the books for the whole year?
3,800,000. No. 4 million.
So the books cost us. The rent was what?
4 million.
And we borrowed $1.8 million and we paid back $1.8 million. Okay, so that's a wash. So your job now, you know what your job is now? Get another little column here to the right. Well, I just put an X by it and put an X in here. I'm gonna put an X here. I'll put an X here. X here. And an X here. So everywhere we have these X's, I want you to make a journal entry, prepare a trial balance, and then prepare an income statement and a balance sheet. So with 4 journal entries, can you prepare So this is how your cash budget looks. So the banker says, well, let me see the income statement. Let me see the balance sheet. So he sees this. Then he says, I want to see your projected income statement and balance sheet. So can you make an income statement and a balance sheet with this information?
So we're just doing the first four. I mean the
The forward X's.
beginning cash, sales, cost of books, and rent.
Yep, that's all you're doing. That should not be that hard, should it?
Where do we go to find the sheet that you're talking about?
You have to make it. Or go to one of your templates. Here's one here. I just made it. Don't you?
Yeah, but I don't see any like numbers to like do our own beginning cash for.
There it is right here.
Your screen is black.
Oh, do I have it blank? I'm sorry.
Yeah, it's okay. I that's why I was kind of confused on what we were doing.
So screen black for everybody?
I can see you.
Everybody else sees it, Jennifer.
Yeah, I see you.
I see you, but I don't see the screen.
Oh, I see.
Yeah, you know, like the document screen. Yeah.
All right, well, let me come out. See it now?
I do.
So what I'm telling you to do is to prepare me an income statement and a balance sheet. That's the first part of your quiz for today. Income statement and a balance sheet with 4 journal entries.
And we're doing this based on our numbers?
Yeah, I hope all our numbers are the same.
Oh.
Oh, we're doing it. Okay. I was just confused for a second because we're doing it based on these numbers that you have now.
Yeah, these numbers here. Can you do an income statement and a Can you journalize these, post to the ledger, prepare a trial balance, and then do me an income statement and a balance sheet? How y'all coming with this complicated income statement and balance sheet? I didn't mean to stress y'all out that much. Jennifer's pulling out her hair.
I'm so lost. I'm okay. Wait. Okay, so those yellow X's are what we're doing. Wait, are we using the total? Okay, the
Yeah.
total to make the journal entries.
What's this first journal entry gonna be? What's the one where I hit you in the head if you miss it in class?
Cash and common stocks.
So what now?
I think it's cash and common stock.
Okay, so you debit, cash, and credit common stock for this first one. What you gonna do for this one?
Cash and sales.
Debit, cash, and credit sales. What you gonna do for this one?
Cost of goods sold. And cash.
All right, and what you gonna do for this one?
Rent and cash.
Okay.
It's not
Hey, y'all.
rent. It's not a rent expense. Professor?
Correct. Rent, expense, and cash.
Oh,
So I want y'all to go through and prepare me an income statement and a balance sheet. You know, post to the ledger, do a trial balance and all of that.
So the cost of books, is it cost of books sold?
That's fine. Cost of books, so
Cost of goods sold, sorry, that's what I meant.
doesn't matter. Cost of books, so you know you're gonna label it based on the business. So just use COGS then. What would be the first thing on the income statement?
Now the sales.
All right, so sales. Now total sales were what?
10 million.
10 million. So we got this new income statement, direct costing. We're gonna say less variable costs. So what's our variable costs?
That's the cost of books.
Yeah, because it changed all the time. So that's the variable cost. That's the cost of the books. That was 4 million. And so what's our next line gonna be?
Gross profit.
Nah, contribution margin.
Oh,
So our contribution margin is what?
6 million.
Then our fixed costs is how much?
We don't have it.
What's the cost that stayed the same all the time?
Is it
The
the
rent,
100,000?
The
the
rent.
rent,
The rent.
So our net income was what? That we would have projected would have been what?
2 million.
$2 million. So this is what we would have taken to the banker, saying we're gonna have some short quarters, but this is what our income statement is gonna look like. And he says, what's the balance sheet gonna look like then? So what's gonna be on this balance sheet?
Blah, blah, blah.
What now?
Oh, sorry. We don't have any accounts payable. Account payable.
Now you pay cash for those books.
Oh, yes. What else do we have there?
Maybe some cash. How much cash you might have?
Yes, cash. $2,100,000.
So that's your total asset, okay? So then we need to add up our equities, and what do we have in equity? How much you got in common stock?
100,000.
Common stock's 100,000.
Yes.
What else you got? You're not balanced.
We have the cost of goods or the variable.
What account would you have here after the closing entries were made?
That's the cost of goods.
No, what account will be on the balance sheet after the closing entries are made?
Oh, retained earnings.
Retained earnings. And retained earnings is gonna be what? What's our retained earnings gonna be?
Is it 2 mil?
2 million. The net income would have been close to retained earnings. And so now we're equal. So that's the little balance sheet. That's the income statement and the balance sheet. So can we prepare an income statement and a balance sheet in the future?
Wait, that's all we had to do?
That's all I had to do.
Oh my gosh. Oh, okay, never mind.
Well, you know, sometimes you want to make things difficult. Sometimes we like to make things difficult.
Okay, so speaking of making things difficult, can I just get a review of, like, for myself, because you said, so we're supposed to do part 2 on our project, right? So part 2 is like the second sheet. So that means like that whole second sheet, or we're just supposed to do like a section of it? Because I feel like our group was making it like we were trying to do more than what we were told to do, because, you know, I feel like maybe we're overthinking it. So I just wanted to confirm.
Okay.
I'm sorry.
We'll let the new A+ group show us how to do it.
Wait, is that the updated one? I emailed you an updated one.
Oh, Jennifer.
I think
So they put this in 10 reasons why companies fail and 10 reasons why they weren't gonna fail.
yeah, we did the whole thing.
They had their logo. They had the members of their group. Then they put in the project assumptions. You didn't have to go to step 3. So they have it all in. Selling price, the multiple. They got the total variable cost. They got the contribution margin. They got the capital expenditure budget.
So only year 1 is what they have, right? So we're only doing year 1.
No, it's all of them. The updated one, you just literally do the one for year 1, and then you copy and paste all of those onto the following years, because the fixed cost is still.
Because he wants them all the same number.
Yeah.
So to make it simple, you don't have to, but I just said make the fixed cost $200,000.
Okay. See, that's where we were just trying to confirm that part.
You don't have to, it's up to you, but I was saying to simplify it, and then you go through this chart here.
So are we just guessing numbers?
Yeah, you would go if you running that business. I bet let's see if this will come in. But that's not the point of what I want. All right, so everybody see this little problem here, correct? So we have all of our assumptions here. Okay, so suppose I told you to calculate the break even in terms of number of books sold that need to be sold. So you just break even so that net income will be zero. And suppose I told you to calculate the number of books that need to be sold to produce a profit of $1 million. So make those two calculations for me. How many books would need to be sold to break even in this problem, and how many books would be sold to make a profit of $1 million given these assumptions? So I think I have everything. So you tell me these two items here based on these assumptions. And once again, this is something, you know, all the companies go through. And they've done this now for every product. For Christmas, how many do I need to sell to break even? How many do I need to sell to make $1 million? Or whatever profit they want. So every business in the mall has made this calculation. And those not in the mall, they've all made this calculation. How many we got to sell to break even? How many we got to sell to make $1 million? So can you make that calculation for me? Don't make it difficult, Jennifer.
Is this for the quiz as well?
Of course. That's the main part of the quiz. Since y'all had trouble with the first part, maybe time we'll have it. But can y'all do the second part?
Well, we're on number 3 and 4, right?
Mm-hmm.
Do you need to do it? So we need to pull up an Excel sheet for this as well, or?
Oh, Jennifer.
I mean, if it's no, then I'm gonna just write it on this Word document.
Yeah, are we turning this in? Because I've been doing mine on different stuff. Should I put it all in one thing?
You're not turning it in, Taylor. I just want you to give me two numbers of 3 and 4. And not take all day to do it. So we're seeing what you learned from last week. You got it done, Rodney?
Not quite.
Y'all taking too long? Taking too long. 2 more minutes, 2 more minutes. I told y'all to memorize those formulas. The code, you didn't memorize those formulas?
I have
Alright,
them saved so I can look at them.
So let me go over here. Where's my income statement at? Fixed costs, I have $4 million on the income statement. So I'm going to put 4 million here. And what I divide that 4 million by?
The 6
million.
million.
No.
Oh no.
6 million.
Wait, but I thought that was the
That's not
contribution
the,
margin.
what I said, that's not the CM?
Divided by what? What, Parker?
30.
Thank you, Parker. Divide by 30. How did she get 30?
She did 50 minus 20.
50 minus 20. That's all you had to do. All I had to do is take 4 million, divide it by 30, and give me a number. And if you were going to calculate the number to produce a profit of $1 million, what would you have done? Y'all taking too long?
It would be the fixed cost plus 1 million divided by 30.
That's all it would be. Okay, so you all look at that, calculate that. Let's move it right along. Now, when you make a product, we just looked at a retail company there, and we went through making the journal entries and everything. It's a lot simpler. But overall, the process is the same. You got to prepare schedules, make journal entries, do a trial balance, do an income statement and a balance sheet, as well as work on that cash budget. So everything we did over here, a cash budget, we went to the totals to make some journal entries, and then we were able to prepare an income statement and a balance sheet. And this is the cash budget here. You got to do the same thing. But if you're making a product, there's schedules that you got to complete and then move in numbers from the schedules to get to the cash budget. Then you got to do an income statement and a balance sheet. So to get your income statement and balance sheet done, you're going to make journal entries. So we're going to go through the same process, except this cash budget, we're going to make all the calculations in these sub budgets and bring them in. So it's much more complicated when we have a manufacturing company. So what you're going to be doing for your project, sales budget, production budget, we won't assume in an inventory, so you don't have to worry about that. Selling and administrative expense budget, direct materials, direct labor, manufacturing overhead budget. That will lead to the cash budget. That will lead to your budget, income statement, and balance sheet. You got to show this if you're losing 100,000, if you break it, even if you make it $1 million, if you're making 2 million. Okay, so all of these budgets have to be prepared. Sales, ending budget, production budget, selling, administrative, direct materials, direct labor. And I guess I'll put this handout in there, but okay, you have to prepare these budgets. Then you prepare the financial statements based on these budgets. And then in the handout, which is in the primer, we'll talk about, first of all, the sales budget. And that's the first one we'll do next time. So when you do the sales budget, I got 11 things that you're doing. Prepare that sales budget. And then I got these journal entries that you're going to make. Okay, so, and that's the one we'll concentrate on next time, the sales budget. Then the journal entries that you got to make for the sales budget. Then we have a production budget. You don't have the raw materials budget, and you need one for each raw material. Your direct labor budget. And each time I've got listed the journal entries that you got to make. And here's the selling expenses, operating budget, administrative expenses budget, capital expenditure budget, then the cash budget, and journal entries with that cash budget. So all of this is laid out in terms of how we get to that same position where we have the financial statements and the cash budget. So in your primer, and I will make sure I get this insert in there, these are your assumptions, and you'll be pulling in some of these same assumptions when you, as you finish up and get into stage 3. But you're going to have assumptions about, okay, what are the quarterly sales? And you'll be using your selling price. All your sales will be on credit to simplify it. You have a bad debt, you have your collections, your desired ending inventory, and this is showing the raw materials. So you have to have assumption of everything. Then on your fixed costs, you put those in. And then those quantity solutions and breaking even the thing that that you have. You already, this is just a little more detail, but it's the same thing. Target loss 100, break even, target profit of $1 million. Okay. And so this is the budget that we're going to work on next time, the sales budget. And we're going to put all of these numbers in. So you will have the assumptions. So next time, we simply are going to be working at the start of the period here. So we're going to be working with these numbers and preparing a sales budget. That's the first budget we have to prepare. And that sales budget is going to consist of these assumptions, the number of sales, selling price, total sales, all of the sales are on credit, the bad debts. Have to look at these collections. We don't collect everything in the first quarter sale now. Total collections. And then we'll be making these journal entries that we need to make. And so that's where we'll be going next time. Now the starting point, it's still going to be, of course, here. So if the target loss is 100,000, you'll be determining the quantity that's going to produce $100,000 loss. And once you do that, that quantity comes in here for your sale. So we'll be going through that next time. But the bottom line is you've got to have memorized those formulas and be able to make those calculations as we go through. So it seems like a lot, but that's why you have a lot of people on your team, and everybody on the team will have some of those schedules to work with. Some schedules are more critical than others. You have the assumptions, which everybody should work on to make sure your quantities are correct. Then someone works on the sales budget, someone works on the production budget and raw materials, somebody else works on manufacturing overhead. So you got to assign those as you work through to get your first year done. So we covered a little bit today, but once we begin to work, next class period, you'll see how that'll work. We'll work some next Tuesday. Then when we come back from the holidays, your first year will be required. So you will be presenting to me your first year. Now your assumptions, what I showed you from, I guess that was Team 7, that's got to be done and it's got to be correct because that's where your quantities are coming from. And so what I typically do is I meet with each team by themselves. So I can look at their first year. And they can't say I embarrassed them in front of the rest of the class if they got a mistake. So each team has this 15 minutes to present to me their first year, but they've gone through this entire process. So we'll see how we come. So review the video and what we've done, review that retail company, realize that on a manufacturing company, it's more complicated. And we're going to be concentrating on that sales budget. So once you get the sales budget done, then there'll be a sales budget quiz. But guess what? That quiz is based on the assumptions in your project. So when you do that sales budget quiz, it's based on the assumptions that are in your project. So you need to get your assumptions in. I'll be looking at those to make sure they're in good shape. If they're not in good shape, then either after class on Thursday or on Friday or sometime, you'll have to get your assumptions clear. Use whole dollars. And we'll go from there. So we'll get there. As I told you, things will get a little more involved, but it's no different from that little problem that we did at the beginning of the period. You got to be able to see the big picture, make journal entries, prepare financial statements. So that's why we start off the year with preparing financial statements. We end in the year preparing financial statements, but based on your estimates. So for your project, you got to have an income statement and balance sheets for each of the years involved. When you got a target loss, there's an income statement and a balance sheet. When you break even, there's an income statement and a balance sheet. When you make $1 million, there's an income statement and a balance sheet. When you make $2 million, there's an income statement and a balance sheet. So that's where we'll be moving. But we work on that first year, get that straight, and we'll go from there by working on the first budget, the sales budget. Sales budget is probably the most difficult budget. Production budget follows from that. Couple of things in that. Then the other budgets fall into place, so they're not that difficult. So we'll be going through the demonstration problem, and as of every chapter, you got to work out problem in there. So you got to work out problem. We'll get that to you, and we'll go from there. Are there any questions?
Yes. So, me and my group were wondering if we can, if we can extend for our project, because we did I think we did way too complicated in our brains. Like we were looking up numbers on the internet, for how much this is gonna be and this is gonna be, and we went we went into depth, and I'm pretty sure we went a little bit too deep into depth because we were working on it for 3.5 hours. So, do you think, because also Dominique's not with us, so she's a little bit behind. So she said that she's gonna watch this so that, because that's why I asked earlier to get a walkthrough, because she wants to watch this so that she can understand what we're doing.
Okay, I guess they got a basketball game tonight. Okay, well, we can extend it. How much you want me to extend it to?
Next class would be awesome.
All right, we'll extend it to next class.
Thank you so much. Thank you so much. I'll let her know. I'll let her know that you'll be very grateful.
Thank you, sir.
Okay.
Thank you.
Anyone else? So we extend it to next class period on those assumptions. They're basic assumptions. Don't get overcomplicated on it. And what I'll do, I'll extend them till about, once again, midnight that night. Then I'll try to be on early on Thursday so we can look at anyone. So I can look at it. Anything else for the good of the cause? Well, you all have a pleasant evening in this 80-degree Houston weather. It's hot, running AC units. And next class period, hopefully, things will be, we'll get it clear, but we have to get that introduction to it. And once we get the introduction to it and we start rolling, we'll be okay.
I'm sorry, I have a question. On Blackboard, it says there's a quiz due tonight. I'm confused.
Say that. Just say that.
Yeah, it says due tonight at 7:30.
That's probably a practice quiz in there. You can ignore that.
So do you want us to do it? Or
Just practice on it.
okay.
So that's just kind of a practice quiz. You're going to have those quantities correct. Remember, nobody's going to give you the quantity to lose 100,000. And if it's not correct, then your numbers are not going to come out right. There's certain things, by at the end of the day, once you make all your journal entries, you got to have a loss of 100,000 the first year. So the more practice, the better. So, team can just practice on that so that when you get your assumptions to me for stage 2, and you got those quantities for losing 100,000, it needs to be correct. Because once we do the sales budget based on this example, then you got to go and do a sales quiz based on the assumption in your problem. Okay? So everything, all the testing now is basically based on your project. And that's a good thing, you know, because you're getting quizzed on it, so you make sure it's correct as we go through. Any other comments or questions? Okay, so you got your little projects. Hopefully you got them made. So you're losing 100,000 the first year. So we're seeing, so the things that we're doing, we're now doing it for your project. So we have this example, but once we do the example, you got to do the same thing for your project. So we'll see how that will look next time. Okay, so
Thank you, sir.
yeah.